Okay, so we have TF right here, and then the Russell was a lot weaker than the S&P. This is an extremely bearish sign because the Russell is the market driving the market because it's small caps. It reacts faster, it does everything faster. When the Russell is weaker than S&Ps, that's a scary sign for any of the long traders. Now, if I were to show you a quick study here, I'm just going to do a quick adjustment over here. I'm just going to do a quick adjustment right here, guys. I'm going to move this over to a comparison chart. This might just take a quick minute, but let me move this to compare. And I'm going to compare to the S&P 500, and that should be it. Alright, so we're going to apply, and then looks good. Okay, so this is the S&P. Obviously, you can see a whole lot stronger than the Russell, but the Russell being a whole lot weaker. So that's just something to show for that, saying that, you know, when you have the Russell or small caps, the stocks that lead, being a whole lot weaker, it's kind of an interesting sign and something you should pay attention to, by the way. So hopefully the Russell catalyst will mean something and S&Ps can top out. This chart here. It seems that I'm having a little bit of an issue right now with some of the screens with just some of the stuff right now. So let me do a quick adjustment right now. Here we go. Here we go. So we're back. I'm just taking a look at S&Ps. Us premium sellers really need a turnaround. It's being extremely hard for the markets to work and figure themselves out. And it really has been a tough market. So if you think you're just trading poorly and you're an options trader, no, it's not. It's just the condition we're in. I'm going to go switch over back to the VIX right now. And the VIX, look how low, take a look at how low the VIX is. The VIX is crazy low. The VIX right here is crazy low. We're having some sort of issue with our bandwidth right now. I'm not sure exactly what it is. Let me make a quick adjustment right now to our computer. We're having some sort of computer issue. There, that should speed up the computer right now. Really sorry about that, guys. But if you take a look at the chart of the VIX, we're extremely low. So right now what you're doing is you're probably buying debit spreads and you're short the market. Because if you look here, being inherently short means that you're long vol. So right now, how can you be long VIX at this level? VIX is the most mean reverting product around. And look how this works. So we fell back to 9 in 07, which is understandable, but we mean reverted. We mean reverted all the way up to 21 in 07 right here. And then we started going up, and we were in this area of low volatility for quite a while, and I'll show you why we're in this area. And these areas are manageable because we get these mean reversions, and that's fine. But we're in this area of high volatility for extremely long time. Now sometimes it can take quite a while for the markets to get high volatility, and hopefully we don't see the VIX going up to 89 again, because that means the crash. But for us options traders, you're selling vol and you're buying vol depending on it, and hopefully you can stay short premium, long theta, and hopefully you can get some profits considering the situation. If you time it right, you can definitely get it well. Lots of people are critical of the options trader mentality of going with the trend, but again, for us options traders, we can only go with the trend so long. And let me switch back here. We can only go with a trend so long? Because take a look here. So we have this trend. You can buy these dips and these different buy the different dips and thing. The only thing is these dips are getting smaller. It's making us hard. The VIX is starting to pop less. It's making less sense for us to do this. So we can go with the trend. And I'm going to zoom out on a 3-year chart, maybe even 4 years on the daily. So we went up to 50 right here in the VIX. This was 2011, I think. No, this was 2010. This was the 2011 thing. Almost the same. So we can deal with this trend, the trend, because we can sell volatility into these dips. You get, and then I'll zoom in, and then you get all these, and you can sell the volatility going into here. However, for certain periods of time, we need to be long volatility, staying short premium, but still long volatility. Like for example, you can start getting long volatility in here. It keeps getting crushed and crushed and crushed and crushed. But we get a mean reversion, and then you can sell it. And then what you can do at lows is you can start buying volatility again. So we can go with the trend, but at certain points the volatility spikes get lower and lower and lower, and it gets harder and harder to go with the trend. So with options traders, it may almost make sense as you get paid quickly on these down moves, and then you can sell some volatility going here, and you can end up for the year, even going against the entire trend for the year, because most of the time you're going to end up short deltas and short premium because of the inherently low volatility in the market, because the volatility has been crazy low. So right now, hopefully we can get a mean reversion above the 2021 area. I was just at the SIBO the other day, so if you guys are wondering why there's no broadcast, I was at the SIBO, I was at Tasty Trade. Hopefully I will, if you aren't Tasty Trade viewers, I'll maybe air that interview on live, but I'm not sure. So they're all dying. Like, they really need the volatility to pop, and if we can get a quick pop in volatility, even at 27, but hopefully past this 23 area up here at the year highs in volatility, which is, this is pretty much 1 year. If we can get above that, that's really where we need the markets to go. Alright guys, so I'm going to go on a quick break, just a 1-minute break. I will be back, and we will be talking the yen, crude oil, pairs trading, and a few pairs, and then the last segment we will talk some options trades I'm looking at. Okay, I'll be back in a minute, guys. welcome back to Strategic Trading Radio Live. I'm your host, Alex Weisenbach, and I'm a 12-year-old trader. Before I get into anything else, we're going to talk about a few futures and a few pairs trades I'm looking at, and then we'll get into some option strategies. Before I get into anything else, I want to talk about the contact information for Strategic Trading Radio. If you want to contact Strategic Trading Radio Live, you could send an email to strategictradingradio@gmail.com, and pretty soon we are going to have a live call-in segment up. So you can call into the show. We tried it for a while, but I think we're going to need more viewers and people call in. So right now we're just going to try building our viewership and hopefully building our base in the world here. And then let me just do a quick thing right here so I can switch back to my trade page, and then we'll talk about a few markets. Some of you guys have been wondering, some of you guys may wonder why I don't talk about technical or fundamental analysis. Well, I really don't believe in technical analysis at all. At least in the traditional sense. I've seen some interesting studies based off market action, market price action, different market correlations that seem to interest me and do work over time, and some of the different models that I've done. I don't believe markets are totally random like a lot of options traders do. However, I also don't talk about fundamental information. The reason I don't talk about fundamental information is I do believe it works, but in my trading time frame and my trading style, it will not help a lot of the trades are doing. A lot of the trades I'm doing are math or quant based off probabilities and edges in the options market, and I don't want people starting to think about a fundamental of some sort of event happening in Egypt, or maybe just the earnings of a company. I don't want people thinking about that when you have more important things in the stock in our type of trading, with implied volatility, the value of the calls and puts, the premiums, theta decay, delta. There's much more important things to be looking at than just fundamental information in the way you should be trading options. So we'll definitely discuss some of the things involved with trading options. But again, some of you guys do wonder why I don't talk about fundamentals or technicals in this trading thing. And the only reason is it doesn't really fit with the type of trades I am doing. Alright guys, so we're going to go ahead and switch over to the charts here and some of the trade tab stuff. So let's do a quick switch. Before I was looking at the VIX, I'm going to go ahead now and I'm going to look at the yen. The yen really has been bouncing lately, as you can see right there on the chart. And the only reason I'm looking at long-term charts is just to show you what kind of trend the yen has been in. So right now, I think the yen is buyable, but we really need some sort of pullback. Maybe we can fall from here. I've been long a little yen through FXY, and it's pretty much the same chart. However, I'm taking advantage of options probabilities and different things involved in the options market. Alright then. So going back, the yen. So the yen really has been popping. People have been extremely bearish in the yen. Yen finally got oversold. I was trying to get long yen all the way through here. So right now, I don't want to get long yen directly, but I was considering maybe through some sort of pairs trade you can do this. And I'm not setting up for notional values. Maybe what you can do is sell euro, buy yen, and kind of ride that little trend in the yen. I'm still bullish in the yen, but I'm not as bullish. So I'm trying to be careful coming in here. So maybe sell the 6E, 6J pair into this bouncing area. It would be kind of an interesting trade to see. If you're wondering where 6E is trading at, by the way, it's the euro, guys. Euro's a 133.4. It's getting a little expensive. This was just something I was drawing out for some of the viewers for the last show, just to show the trading range it's in. So if we can get some toppy action or something going on in the euro, that'd be extremely interesting to see. Now, again, guys, I also trade with a certain macro thesis or market thesis in mind for a major market. So I do pairs trade, ETFs. For me, futures are still a little too big of a product. People say, well, there's no excuse to be in it because you can day trade and there's all this, but the risk isn't worth it. It makes much more sense to do an options trade, and if I really want to do just a flat directional trade, I will do a trade like this. Alright then. So next thing is I want to talk about an interesting pair I'm looking at. But, before that, I'll just take a look at oil with you guys also. I just want to show you oil. We've had this interesting movement down. The S&Ps are starting to move down with oil. I won short oil up here, but I missed it. Oil kept chugging down, so an interesting way to do this would be, since I missed the trade, I'm going to get short S&Ps and long oil. I really like the look here. Pretty good correlations in between. I can see the exact right here, and this is just the correlation of the SPX, but I just look at that to hedge my other account. But decent correlation, 0.682, so sell the pair, and you might get some interesting action out of it coming in here. Alright then, so I just want to make that clear that I like the short in oil, but again, it's kind of hard for me to do considering where it's gone. So maybe short S&P, short oil. If I were to do maybe more of a trend style trade, I could do the short oil and just ignore S&Ps, but it fits better to do something like SPY minus USO. The stock pairs just make more sense for me, so for now, again, I'm just doing the stock pairs. Alright then, I'm going to do a quick change on here, so bear with me. So while we're looking at charts, but only while we're looking at charts. I'm just going to make a quick change so you can see my face while we're doing the charts, and then I will move, so when we go to the trade tab, we can deal with that. Just a quick sec here. I'm going to add my face to the lower area. Alright, here you go. Okay, we're back, guys. So I'm just taking a look at the charts. Here, this looks better for now. Alright, so I'm cutting off part of the charts right now, but that's fine. So going back, this is the pairs I was looking at. So next, I want to mention something kind of interesting. I am looking at the GLD minus SLV, shorting the pair. Alright, so we saw a little bounce today. We may see an interesting short going in here. Alright, I get it. Sure. However, I already had a covered call position. in SLV. And I'll show you why. Compared to gold, they're pretty correlated. So compared to gold, silver was pretty cheap compared to gold. So I just, thought, okay, why not do a covered call? I need the risk. So it made sense for my account. So I'm going to go ahead and take my face off here and go ahead and take my face off here so I can do this. And that was just a test, guys. So I haven't not set this up yet. However, I want to show this. So I'm going to add simulated trades, SLV. I'm not going to get the prices perfect, but say I buy a covered stock spread, and then in gold, I'm going to sell I bought a put spread to take advantage of a vol pop I was expecting, and I sold like 10 shares of stock in gold, and the notionals would match up, hopefully. So you get this kind of thing with the gold chart. So if I can kind of show you how I did this. I'm going to hopefully portfolio beta weight it. Alright, so this is all these positions beta weighted to the SPX. So we're going to beta weight it to gold minus silver. And this just shows the risk to gold minus silver. And maybe I can do it, so we'll just do gold. We'll just do gold here. Alright, so this is the position to gold. So even with, I'm beta weighting to gold, so hopefully I want gold to stay within range. I have little risk to the downside, but the reason this ends up happening is because I'm a little bit long and I'm a little bit short, right? So I have this put spread on to take advantage of the vol, and then I'm short 10 shares of GLD, and then I have a covered stock position in SLV. So this essentially is still a bullish position with a more bearish inclination to hedge everything out. Hopefully I can get silver to go up, and this is a better beta weighting. Silver, you have this top where I get a sweet spot right here, but if it goes up too much I start losing money. So it's kind of hedged out by reducing cost basis and different things, but it's an interesting little trade the way I did the pair, because I often have several positions in one stock, so that was something interesting to do. I also asked a Tasty Trade Rising Star about it, who Tasty Trade Rising Stars are extremely good traders following Tasty Trade's option strategies and different things. Even though Tasty Trade is not trying to recommend stuff, you guys should definitely check it out for options trading. But just to show you, this is a kind of interesting way to do a pair. Now, if I really were to do a pair in the usual sense, I'll get rid of this. I would sell 100 gold and then buy 100 silver. So let's set this up. Buy, and then gold, sell, and I often have it ratioed, and then we're going to beta weight it to gold. Hopefully you just get gold to go up or go down just like this, but instead I can kind of mix it and match it. I may end up selling more stock in gold, or maybe buy more put spreads because it makes more sense for my capital. Maybe one more in the money put spread or one out of the money, depending on how I can set it up. But it's just kind of an interesting way to do a pair. Remember, you can still do pairs trades with options. You can still do them like that. However, there's less of a risk involved. Alright then. So I did go through all the pairs I wanted to talk about, so I hope you enjoyed it. Again, Friday we're having Josh Vanderbilt. He's a 19-year-old options and stock trader. He does a few day trades. He trades a lot of the leverage ETFs for his day trades. And but mostly he's just primarily an options trader. So I'm going to go on a quick break. I hope you enjoyed this. We will be back in a minute. back to Strategic Trading Radio Live. I am your host, Alex Weisenbach, and I'm a 12-year-old trader. If you have any questions, comments, or problems with the show, send us an email at strategictradingradio@gmail.com. Alright, so this is the segment where I go through options trades that I look at. The last segment was me going through some of the major markets or different things, like the yen, the S&Ps, oil, and a few pairs trades I'm looking at. So now I'm going to go ahead and look into some options trades. So let me switch over to the screen here. Just one second. Alright, welcome back. Seems to be some sort of issue with this. Alright, let's get everything to synchronize. Okay, everything seems to have synchronized. Alrighty. Okay, so right now you are going to be looking at GMCR. The only reason I'm looking at GMCR is they had earnings yesterday and the stock is down $5. So maybe if we can some sort of continuation of that down move, you can not sell puts, but still some sort of vertical spread in it for me, considering the puts would take up too much capital. But if I were able to sell this 2 strike wide vertical spread, I'd collect 87 cents, max loss $163. Depending on how much the vol is tomorrow, you'll have to check that out. Right now, the volatility in this is like around 75%. But I can't view today's option statistics. Oh, here they are. Okay, 65th percentile. So there's some decent volatility in this product, and the volatility is around 78%. So interesting product to trade after earnings. Next one is Tesla, and they also had earnings. I think I'm gonna start letting you guys know about the earnings. Tesla is way up on earnings. Just looking here. Tesla is way up on earnings. Just look at this. Boom, 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 boom. So obviously they're way up. So those are just a few things for you guys to look at. First stock, WLT. WLT is just some energy company. Going to the daily chart, you have this kind of quick, slow grind down. So I'm considering some light bullish positions. Right now, vertical spread is kind of interesting, but you could also do an iron condor in this. And I probably will skew this to the upside. Let me just check this out. So with iron condor, you're selling a call spread and you're selling a put spread. And hopefully it can even out. So I'm going to sell iron condor. So what I'm going to do is I'm going to look at, so right now 7.5, and then by the 5s. Alright, and then I'm going to take the 12 halves in here. So you're selling the 12 half, and then you're going to buy maybe buy the 14s. So let's see how that works. No, it's too wide. So you can't do that. So you have to go like this. Sell vertical. The 9 and the 7.5 will be fine. And then you take 14. And then I'm going to do this all as one single order. Control sell vertical. And then control sell vertical. And then you're going to sell both of those. So let me just see. I'm going to set this up in the Analyze tab. Much easier for me. So I'm just going to set this up quick so you guys can see every individual thing here. And then I'm going to set this to not beta weighted. I need this as just a single symbol. Alright, so here's what I'm doing. I'm going to show you step by step. and it will show you here on the screen. So I'm selling 9s, sell single, buy single. And please do this all as one trade, but just pay attention to the strikes. You can go sell iron condor, but I'm just doing this one by one. However, what I can do is I can do it like this. Sell single, buy single, sell single, buy single. And then your trade here, your max loss is $104. Your max profit is 46 bucks. So that doesn't make any sense either. So you can't do a non-directional spread like that. Calendar doesn't make a whole lot of sense because then you want volatility to pop, hopefully, but kind of stay around there. Then what you end up having to do is just go through a flat vertical spread, sell maybe one of these. The only thing is that 7.5 strike is kind of weird, so it's kind of tough to do a trade in here, but I just want to show you what the logic is right now. And this was just a quick stock that I looked at because of their implied volatility of 85%. So then, since there's no trade, sometimes there's no trade. So I'm just going to go to the next stock. And this is a paper account. So this paper account had the paper account did have some positions in it because I showed you guys the trade. So right now, this stock is just dying. This stock has been killed lately. So alright, fine, it's killed. Great. That means I am going to take the opposite side. Now, I have to warn you guys. Stay extremely small. I had a few verticals in here, but stay small because this is kind of a dangerous with the action here. So what you can do is you can sell 2 strike wide vertical spread. I don't want to sell put because of how low the stock's going. Maybe even 3 strikes wide, collect 79 cents. Max loss 221. If you want to treat it as a short at the money put, if you really want to do that, for me, what I do is I should like 5 strikes wide. You can collect $1, max loss $5.94, and then I can adjust it as I would a short put, and almost treat it as an undefined risk spread. Otherwise, I don't feel comfortable. I don't feel comfortable selling just naked puts in here, but maybe some sort of vertical put spread or something of the sort. Next thing, you could do an iron condor. So I'll set this up. Please do this as one trade, and I will attempt to set it up as one trade. I will sell vertical. Alright. Here, I'll do it this way. Okay, so I'm selling 11s, selling 11s, but I'm buying the 9s, and then I'm taking a look here, and I'm selling the 15, or I'm selling the 15, and I'm buying this. Oops, it seems to have been messed up. I'm selling. This should be. This is a little messed up here, but I just want to show you this. If you want to adjust, you just go to the strike, and then I'm selling 15s. Alright, so I click sell, and then I click 1, and then I click buy 1. And what this is going to look like is it's going to look like this. And it seems to be something I messed up. Alright, okay. I'm buying this. There we go. And then I'm going to buy. Alright. So you make 66, risk 134 to make 66. High probability of success, wrapped around 66-70%. And you can has a little bit of an upside skew, so you have very little risk to the downside, more to the upside, more risk to the downside. Hopefully you can get it between 10 and 15 and a half by expiration. It should be wrapped right around one standard deviation move, which would be about $3. So high probability of success, and it's kind of an interesting trade. All right, next trade. So most of these are bullish trades. The next trade is VIX. And I don't like using the Analyze tab. I just use it for iron condors because it's easier to set up all the 4 strikes. The VIX, the VIX options are just a bit expensive. So I just want to show you guys there's kind of some interesting trades in the VIX. Thing is, the VIX is kind of wide. It's wide. Its strikes are wide, you see, and there's no put value, so you can't do that. So what you do is you do something like a VIX trade, which is VXX, considering how low, and understand that these have downside drag, but this is just kind of idea. So you sell quick put spread. You can hope for something like this. So I'm thinking just sell a put spread. Sell put spread, high implied volatility, sell vertical, and you're short the 14 and you buy the 12. So you get 73-cent credit, max loss 127, high probability of success around 60%, and some interesting trade going on. So you can sell put spread. Next thing you could do is you could do a skewed iron condor. So for me, I sell the 13 vertical, and I will set this up as one trade, and I think I can get this done in here. You sell this, I'm going to sell this, sell, and then I'm going to buy this, and then I'm going to, and I want the upside a little bit widened. So I'm going to sell this. I'm going to sell this. Why is it not working? There we go. I'm selling 1. You don't want to sell 2 of the 18s, and then you buy. And hopefully I can buy that one. So what's going to end up is, it seems to be a little messed up right now, but you probably will get a probability of success around 66%, more room to the upside, and then less risk up here, and then you get a decent probability of success. The reason I want to widen it is because of the downside skew. Alright then, that should wrap everything up. I hope you enjoyed this segment. Thank you for listening. I hope you enjoyed everything, guys. Thank you for listening. Good trading.